The Rebel Capitalist Show. All right, guys, it gives me a great deal of pleasure to welcome someone back to the Rebel Capitalist Show. He's my good buddy and one of the very first people on YouTube that was nice enough to give me a shout out. He is none other than the Uneducated Economist. So, Mr. Uneducated? Or is it Mr. Economist? Welcome back to the show, buddy.
And thanks, George. Yeah, I really appreciate it. Yeah, we go back a couple of years now almost.
Yeah, that's right.
I remember I found that video and I was like, wow, look at this guy. He is really good. And I gave you that shout out. And you're so gracious to give me a call and say, hey, man, I really appreciate the shout out. Why don't you come on the show? And man, I tell you, my channel has done nothing but grow ever since. So thank you, man. I really appreciate it. I mean, I contribute a lot to, of the growth of this channel to that time. So.
Oh, well, you deserve it, buddy. People wouldn't be subscribing to the channel if you didn't have fantastic content. That's for sure.
No, I appreciate it. Sometimes it gets out there a little ways and kind of drifts away from what the mainstream narratives are out there. But I really try to put forth some ideas and some logic and trying to give that perspective from the working class point of view, which is, not something that a lot of people have out there to offer. So.
Yeah, that's right. And we're going to have you at Rebel Capitalist Live too. We'll talk about it at the end of the video, but
yeah,
you're going to
super
be speaking there with Ron Paul and Richard Werner and Lynn Alden and Chris Cole and G. Edward Griffin and a lot of people like that. But I think your view is going to be, to your point, very unique and therefore incredibly valuable.
I appreciate it. I can't thank you enough. I mean, we'll talk about it a little later, but you're bringing me down to meet my heroes, and that's pretty cool.
They're my heroes too, buddy. They're my heroes too, man. All right, so let's talk about the world in which we live. It's getting crazier and crazier and crazier. What's been on your mind the last couple of weeks?
Watching the inflation scenario go down. Watching a lot of the distribution networks, especially, me, I'm involved in the lumber industry. I do retail sales of lumber for a living. So I really focus in on a lot of building supplies and what's taking place as far as building supplies go. This has an impact on the rest of the economy, being that real estate and, construction is like a major industry here in the United States, and it really dictates how the economy is rolling. So when you're seeing disruptions taking place as far as new construction, distribution of building supplies, and then ultimately the end product, the homes, I mean, you put all these things together and man, you really start painting a kind of a crazy scenario that could turn into something that could be very catastrophic in the future.
In on that. I mean, what are you seeing? I mean, you got on the ground, you're in the trenches every day. So what are you seeing with these supply chains for the materials that go into creating new housing supply?
Yeah. It's really interesting to watch. I mean, there is some stuff that is really taking a very long lead time and the prices are incredibly high, while other things haven't changed much, like not only in pricing, but just availability. Like they never changed. It was the same availability, same price, been consistent this entire time. So to me, that's a very peculiar event to take place. And mainly I'm talking about 15-pound asphalt impregnated felt. It's a very common building product. I mean, there is nothing special about this stuff at all. It's just a vapor barrier. So when you're sheathing your house, you got your plywood that goes up, you put a vapor barrier up, and then you put your siding up. Well, that particular vapor barrier, there's a lot of new products out there. So I shouldn't say it's like the most common one, because there's a lot of vapor barriers, especially with these new products that are coming out every day. But it's probably the most common one. And it was $32 a roll 4 years ago. It's $32 a roll today. I've never missed out on a supply of it. It's been there the entire time.
Where is it produced?
I'm not exactly sure what location, because you can get this from several locations here in the United States. But from what I understand, it's just fiber and asphalt, and there's not a lot of labor that goes into it. It's probably pretty much all automated.
But it's produced here in the U.S.
Yeah, it's produced here in the U.S. So, I keep an eye on some of those things. But then you go and you look at like things like vinyl windows. Now, I used to order a vinyl window and have it in 10 days. Now it takes over 2 months. And that vinyl window that used to cost $150 now costs $280. So these things have dramatically changed. And when you think about like when you're a builder who's constructing homes, it's all about having a continuous supply of materials coming to the job.
Yeah.
If there is a disruption in that continuous supply, then the projects start going out in lead times, the prices start going up, everything starts getting disrupted. And then you have issues where you're lining up contractors. If you're not doing all the work yourself, if you don't get that material in time for the subcontractor to come in, you miss out on that window of opportunity to have that subcontractor come in, and there's really not a lot of other availability of people out there. Now your building goes out even further. So what we're having is an issue in completing homes, the completion of homes. And if you go and look at some of the charts that are out there right now, when you compare them to, say, permit issuance and say like starts, you're going to see that there is like a separation between the amount of permits that are issued and starts and the completion of homes. Right. So they're starting them, they're issuing out the permits, but they can't complete them. At some point, I feel that there is going to be a reversal in this shortages, where those lead times of windows aren't going to be 8 weeks, but they're going to fall back down to 4 weeks again.
Right.
When this begins to happen, I feel at that moment we're going to have completions of homes coming in at the same time that homes are being completed faster. That could put a situation at the same time that we have interest rates rising due to the Federal Reserve's monetary policy,
right,
like next year from now.
Yeah.
So I see like a scenario right in there where, you know, you hear these stories of the past where hedge funds were coming in and buying up massive amounts of homes, like mainly BlackRock. You're hearing a lot of these stories.
Yeah.
So now I get to think, and I was like, well, if we have any kind of little bit of a downturn in housing, it's not people who have purchased homes to live in where they don't really care about the prices maybe moving, but instead you have portfolios that need to be adjusted to make up for the fact that you have a depleting, you know, a falling asset there. If a lot of these things have been rented out and you have rents falling, well, then you could go into like the laws of diminishing returns, where people have taken out loans to buy a rental property, but they can't get the rent out of it, and therefore they can't make the payment on the loan.
Right.
These are the type of things that I kind of see happening or could possibly happen coming into the future, mainly like a year from now or so.
Okay, so I got a lot of questions there. Where is the vinyl windows being produced?
Vinyl windows get produced. Well, at least the ones that I purchased are made up here in the Pacific Northwest.
So still
The main issue, yeah, right here in the United States. Yeah, they're all manufactured, but they do use foreign parts. Right.
Okay.
So there's an issue right there where you're getting in some of the products that are not available to manufacture these windows in a time frame that we once had.
Maybe that's what explains it, where that other material you were talking about earlier, maybe that's all produced here. They don't have to rely on those the global supply chains.
That's exactly right. I mean, we noticed it in lumber.
Truckers, yeah.
Yeah, lumber was a great indicator of that exact scenario. I mean, we saw lumber depletions. We saw the demand for it go up as everybody was locked down and got a stimulus check. They went out, bought a lot of lumber, depleted the inventory even more, ramped up production to try and fill in this demand, overproduced, and then you had a crash in the pricing. Right now, we're seeing the lumber prices move back into something that was once a normal price. When I say 500 per thousand, I think that's normal. Is it high comparatively to like say 2017 or 16? Yeah, but I mean, when you consider that we were selling lumber at 500 per thousand in 2018 before the pandemic, then yeah, that's a somewhat of a normal price. I mean, yeah, it's high, but it's normal. Right now, we got the January contract pushing up into 800 per thousand, but there's a lot of things that are taking place. We got tariffs that are going to be kicking in right then. We have like the Canadian government who's putting restrictions on what they can log out of the BC area. So these restrictions that are being pushed onto the lumber industry, I mean, it just changes the perspective of things, right? So pretty soon you're going to have all these restrictions on lumber. Well, then you got the investors saying, hey, come January, we're going to have an issue with lumber and getting the distribution of it. So it doesn't surprise me to see 800 per thousand on the January contract right now. What will surprise me is if we actually close at 800 per thousand on that. I feel that we'll probably be back down into the 500 per thousand by the time that happens. And this news will no longer be like the changing information that's coming to the industry right now.
Yeah, so it's baked into the cake. That makes a lot of sense. And then I'd go back to what you're saying with your observation of the housing market, where these builders are going to bring more supply online, or could possibly bring more supply online because a lot of the supplies they need, those supply chain disruptions are being fixed. And therefore, more housing produced, supply goes up. At the same time, the Fed is increasing interest rates, and therefore you got supply going up while demand is going down, or purchasing power going down for those homes. Another thing I'd add is if the interest rate gets up high enough on the 10-year, and obviously that's a huge unknown, but you get to this tipping point with the private equity funds where do you really want to deal with tenants and toilets for 3 or 4% when you could go out and buy the 10-year treasury for 4%? And just assuming that it gets that high, obviously that's a big unknown, but if it does, I think you'll see a massive rotation of capital from the housing market back into treasuries, because it just, long term it makes more sense because you can still get that 4% yield without all the headache, and it's far more liquid. So that could exacerbate this increased supply that you were referring to earlier.
Yeah, exactly. I mean, that's a good way to relate it back down to is that U.S. Treasury, because that 10-year, I mean, it's everything. Everything is revolves around that U.S. 10-year Treasury, and where it goes, everything as far as a loan goes with it. And yeah, if an investor can look at the U.S. Treasury and say, "Hey, man, I can loan the government and guarantee a return, or I can try and deal with a tenant and rent." I mean, you would even take a little bit of a loss on it just to not have the headache.
Yeah. Yeah, that's right. So then the next thing that comes to mind is the GFC housing prices peaked out, or prior to the GFC, housing prices peaked out around 2006, and they bottomed out around 2012. So it took 6 years. The housing market moves very, very slowly as far as price decreases. Usually, if we go into this environment where home prices are actually going down, do you see that as something that happens more quickly, or something that's just very slow, kind of a gradual grind down? And let's focus on nominal prices, and then maybe we'll talk about prices adjusted for inflation.
Yeah. I think as far as price decreasing goes, I think that's probably going to be a very slow event grind. Right. There might be like an initial drop, because just like anything, if it moves up too fast, then it's going to have a drop that's too fast. So I mean, I could see maybe an initial kind of a drop, but really ultimately I see things stagnating more than actually dropping. Yeah, right. And that's going to be just as discouraging to people as as prices going down, in a way. I just don't necessarily see a huge housing crisis crash like we experienced during the Great Financial Crisis. And the only reason why I'm saying that is because really the homes that are being sold now, I feel like most of them are only going to the most qualified people. You really with them being as expensive as they are, and the credit availability, as far as who can actually get a loan out there from the available of loans that are out. I just think about it. So it's you got a group of people who are looking to buy homes. Most of those people are just not going to even be available to get it. And only the most qualified people will actually acquire those homes.
And also, because of the price what homes are being built. We've got to define that, because is it these 3,000-4,000 square foot homes, or are they starter homes that are your typical 1,500 square foot 3-bed 2-bath ranch? Because that's another, that there's nuance there that's important.
Right. And it's hard for me to observe that, because I live in it's turning into a very rich area. A lot of people from the Seattle, Portland, California, they sold their expensive homes. They move up here to the Pacific Northwest and are able to buy a home for a third of the price of what they just sold theirs for.
Yeah. And on the Oregon coast.
Yeah, and I'm on the Oregon coast. And so my observation of what I see here is probably not very realistically compared to the rest of the country that's going on out there. Right. If you build a home here and you're building a 1,500 square foot ranch style home, you're probably building that for yourself to live in. If you're building something,
sell it at a profit.
He won't be able to sell it for a profit. That's exactly right. You won't be able to sell it for a profit. It is just, there wouldn't be enough in it to do it, as far as the profitability. So the homes that get built here are very expensive. They're high end, very high quality, expensive homes, because that's what's selling right here. That's what people are willing to buy. If we had a different type of environment, if this wasn't like a retirement community or something like that, then I would probably have something different to say as far as what kind of construction I'm witnessing. But what I see right now, from what I'm looking at, is my area is going through a lot of gentrification right now. And I'm seeing it happen. I mean, the medical district is growing dramatically here. The retirements are, moving up. Like, you see a lot of retirees moving here. And I'm seeing, like, those working class style individuals with families, they're not so prevalent like they once were here.
Yeah, we have priced out of the market right now.
The price out of, it's like really difficult to try and raise a family here. I mean, if you go back through my videos, I just recently like had to deal with just purchasing of a home, and man, it just about killed me. I mean, it took everything I could do to try and make this happen. And I think to myself, it was just like, holy moly, I have a YouTube channel. If I didn't have that, I wouldn't have done it. I would have had to leave. So it makes me wonder, it's just like, how is it that somebody else is supposed to make it?
Yeah.
Like,
I think if you listen to Janet Yellen and Lael Brainerd and the Talking Heads, inflation is a high class problem, remember?
That's a good one. Okay. Yeah, because we don't notice it at all.
Yeah. But let's go back to what you're saying, because you're talking about the housing market. We'll kind of zoom out for a moment.
Yeah, sure.
You're talking about the overall housing market kind of flatlining or going stagnant. And, the first thing that I think of is, what does that do to overall purchasing power, when I believe this increase in purchasing power that we've seen, or any increase in purchasing power, is a result of asset bubbles. So that'd either be the stock market or housing. It's definitely not a result of people producing more. But if it does kind of flatline, and if inflation, consumer price inflation, let's define that, continues to go up at maybe 4, 5, 6% as measured by the CPI, then the real value of the home is actually declining. Meaning that, how much stuff you can buy with the equity in your home is going down.
Yeah. That is going to be a very painful scenario for a lot of people that are not expecting it. Like, I know quite a few people who have flipped houses over the last few years, and I don't know what they would do if they didn't flip houses.
Right.
Like if you don't have that scenario in which that you can sell this house for a profit,
you don't know how they get their purchasing power. You don't know how they're going to get their purchasing power and whatnot if they didn't have that extra side hustle. Right?
That's it. That's exactly right. Like, you can have your average job. Like, I have my day job. My day job pays the bills. Like, I can pay all my bills with it, but there's nothing left. So if there was anything that I wanted to do, if I wanted to go on vacation, if I want to buy a car, if I want anything in life, I have to find a side hustle to do it.
Yeah.
And that's where, like, YouTube came in for me, because I was doing side hustles, but they'd only pull in a few $100s a month. It's not enough to do anything.
Yeah, but most people's side hustle is their home equity or their 401k.
That's exactly right. So when their home value goes up $30,000 over the last few years, they refinance and take the $30,000 and enjoy their life. And they do this on a regular basis, like every few years. And when you become accustomed to that, what are you going to do when you can't?
Yeah, right. Or it goes the opposite direction.
Exactly. Or it goes to the opposite direction, where it's just like, now it ends up costing you. So I honestly feel that. Oh, go ahead.
What are you seeing with wages, and like what's happening at the lumber yard? Is there any wage pressure? Are you guys seeing labor shortages? Is it hard to get staff, or just in the area with the restaurants? Are you seeing any of that?
Yeah. So I know a few business owners who are having very difficult times keeping staff, and mainly it's the restaurants. Right.
Have they said why? Why the people are quitting or not going back?
Well, there's a lot of reasons for it. A lot of people are relocating, moving out of the area, right? Okay. It's an expensive area to live.
Right.
So, that's kind of taken place. There's also other job opportunities that are starting to come up where, like you could either serve, or, you can go and work for maybe a producer of something, and, a manufacturing, and get paid a better job. So there's kind of that kind of stuff going on, but mainly, like, from what I understand, it's the wages. And so, like, and that's what it comes down to. Like, a lot of these, from what I understand, from a lot of these restaurant owners are saying that, the staff is asking, or they're demanding a higher wage for it. And so when I asked them about this, and I was just like, well, is this something that you guys can actually pay out? And they're like, well, you already know that a restaurant really isn't profitable unless they are fully, like, every dining table is filled.
Even then,
that's
the
when
margins are super thin.
And even then, they're super thin, right? So now they are restricted on having a full dining room. They're pretty much got, like, takeout as their main source of just trying to stay operational. So paying the staff more, even though they're increasing the cost of food, isn't going to be something that's profitable to the restaurant. If it's not profitable to the restaurant, then you can't do it.
So are they having to increase their prices, or do they see further price increases in the future?
Well, they are seeing further price increasing into the future if they can't get the staffing, right?
Yeah.
But, like, some of the stuff is coming in is just, like, it's really, like, things that they wouldn't have anticipated, like to-go containers. They can't get them. Like, they just, like, simply can't get them. If you can't get it, then you can't operate. You can't sell the food.
Right.
So they had to shut down simply off a little styrofoam container that was unavailable.
Well, let's be clear. It's the government restriction.
Or, yeah, I mean,
starts with the
whatever the cause of it
interference.
It's just, like, that's the situation that they're in. I personally, when I'm looking out at their, like, at some of the, like, the job that I work at, luckily, the company that I work for, he's a really good guy, and he treats his employees really well. We are one of the few lumber yards in the entire country that still offers health insurance. So my boss is a really, really good dude, and the people who work for him really enjoy their job. So we don't have a high turnover, and we don't have a lot of, like, opportunity to get into the company. There's just, like, the people who are there like being there, and they stick around. So I don't really see it in my personal business as much as, like, what I'm hearing from some of the other places out there. But I can tell you, like, from some of my friends, when they were getting stimulus checks, they quit their job and started working under the table and just rolling in money. Yeah. And so
where are they? So where are they now? I mean,
now
those stimulus checks declined. And then another thing I'd ask you about the restaurant owners. I don't know if you've had this conversation with them, but I'd be curious to know if they got PPP loans. I just got a text from my sister yesterday, and because I forgot on some video I was talking about the increase in the M2 money supply. This conversation I had with Joseph Wang, it was a result of not only stimmy checks but the PPP loans, and I didn't realize to what degree the PPP loans really affected the number. And my sister texts me and she says pretty much every single business owner that she knows, she's in Dallas, got a check for PPP.
Yeah, just about every business owner I know did too.
Okay.
Even some of the grants to, like, some of the gig workers that I know, they got a bunch of money as well. And they didn't even have businesses or employees.
Yeah, I forgot about that.
They, like, a buddy of mine, he does computer tech work, and he was, like, in a really bad spot. He was like, man, I don't know what I'm going to do, man. I haven't had any money or whatever. And I invite him over for dinner just so he had something to eat. And he goes, man, you wouldn't believe it. I opened up the mailbox the other day, and there was 8 envelopes in there with $1,000 in each one of them from the IRS. And he goes, and that happened a couple of times, and he was talking about this money that started rolling in from all these grants and stuff that he had applied for as a gig worker. And he was shaking his head at it. He goes, man, they gave me health insurance. They gave me food stamps. They gave me all this stuff. He goes, basically just took care of me for an entire year,
So what is he doing now? Is he continuing to look for work, or?
Well, he went back to, once people started feeling okay about having strangers in their homes again, because he goes into the homes and hooks up their computers and Wi-Fi's and, does stuff like that. Oh, okay. So once that, like, that stress of having a stranger in your home kind of dropped away, and businesses were allowing, people to come in again, then he started getting more work. So now he says, man, now sometimes it just feels like he's overwhelmed with work as people are trying to, get things back up and running again. But yeah, for a year there, he was really nervous about it. But yeah, all of a sudden he's just like, man, he wasn't even expecting some of the stuff that came in. He was just like, he signed up for these grants and just kind of forgot about them, thinking that never going to happen.
Yeah, that's a good point. I going back to that discussion I had with Joseph Wang the other day, he looked at a chart that I hadn't seen before, and it's on the Fred website, but it breaks down M2 even further.
Oh, yeah.
And it's the total amount in checking deposits for American households in aggregate total.
Interesting.
And
what did that show?
At the end of 2019, the number was 1.2 trillion. Okay. Today, it's 3.6.
Whoa, huge savings, right?
So you have seen the way I always say it is it's the dollars that are on the asset side of the non-bank entity's balance sheet in the real economy. So that's the average Joe and Jane. Their balance sheet now has an extra $2.4 trillion above and beyond what they had going into 2020. So that is that's some increase in purchasing power. That's some free money right there.
Yeah, it's interesting. I did a video, I don't know, maybe a year ago, saying, I think the title of it was "The Rich Have No Idea What the Poor Will Do." And I said that once you give out all this stimulus money, that these people are going to hold on to it in fear of inflation so that they have something to supplement their income as the prices go up, is what I had said. And I feel that that's probably the case with a lot of that savings. Like, they're not looking to dump that into, going on vacation and stuff. They're going to use that to survive with as the prices continue to go up. That's one of the things that I had thought of, over a year ago as this came into it. And the reason why is that I know that that's what I would have done. Like, if I didn't have any money and I had a fear of inflation coming into the future, and all of a sudden I just got a handful of money, I'd put that stuff in savings and wait for that inflation to come so I could supplement my income.
Or the uncertainty of having a job in the future.
Or the uncertainty of even having a job. That's right. One of the things that I don't think a lot of people realize is that when you don't have a savings, you wish you did. And it's hard to start a savings. Putting $20 and saying aside and saying, I'm not going to spend this week, is almost impossible if that's the last $20 you have. And so when all of a sudden, boom, here you go, here's a savings for you. And if you're just wild, you're going to go and spend it. But if you're like been a hardworking person your entire life who's been struggling, that's a godsend. I mean, having that security behind you. I remember one time when I was completely broke and my cars were broken and I was just in really bad shape. My mom gave me $300. She gave me 3 $100 bills in an envelope. Man, what a relief. All of a sudden I was thinking, man, I don't have to stress about the bills or the car insurance or anything right now. I got this $300 to back me up. That's all it took, was $300 to make my life so much easier. And it wasn't anything but a symbol. It was just an envelope in a safe, but it made all the difference in the world. So when I see when you see this high savings, yeah, it's probably because they were just handed a bunch of money and they're in fear of what's going to come. And that's why they're holding on to it.
What do you think it would take them to start spending that down? It would take like job security. Do you think, at what point do they say, okay, I'm comfortable. I'm going to go at this $10,000 that I've saved from whatever, government program. Now I feel more comfortable going on that vacation, or maybe now I feel more comfortable just, rolling the dice and buying Shibu Inu with it or something.
Yeah. Well, you'll find a lot of people who are going to try and be smart with it and try and invest it or something like that. Most people, as they begin to feel more comfortable with the situation, will probably just nickel and dime it away until it's gone.
So just gradually.
Yeah, just gradually just dissipate. Yeah.
Yeah. So what do you think that does for the consumer prices moving forward? When you juxtapose that to the supply shocks that we've seen, and I think a lot of the supply constraints will continue, But to your point, a lot of these goods will come back online. So
Yeah.
we've got this massive increase in the amount of dollars that are on the balance sheet of the average Americans. That they may be saving it. They're tentative, to say the least. They're apprehensive, but in the future they may start spending it to a greater degree. But then we've got the supply side maybe coming back online. So how does that translate into consumer prices?
Well, again, like, once the relief of the distribution network starts to take place, like right now, there seems no end to it. Like, I don't see like the shortages coming to an end like in the next couple of months. I think this is probably going to continue for some time. For as long as it's taken to break down, it's probably going to take that much time, if not longer, to reestablish again. So I mean, we've got years of this ahead of us. I mean, it's not something that's just going to be fixed. But I think about, like, if there is product and there is consumers and there's a trouble in between that, entrepreneurs will fix that. Like, they will make that happen. I mean, if there's a profit to be made, then it'll happen. However, right now, when I hear the inflation, I don't think of it as like a monetary issue right now. It's like, I don't think that there's a lot of people who are going out and taking out a bunch of credit to try and buy all these consumer items, causing the prices to go up. What I see is a huge supply chain breakdown taking place. And if the availability of these goods is just simply not there, then yeah, you're going to see the demand go up and the prices follow with it. However, if these things were being distributed out there, would we see the inflation like we're seeing right now? Like, if there was plenty of truck drivers and there wasn't this backlog of inventory, would we have this price inflation like we're seeing? I think that's a very legitimate question to be asking right now. And so I have to ask, if they do change the monetary policy and they start raising these inflation on it and making it more cumbersome to try and take out a loan, are these entrepreneurs really going to be willing to invest into the distribution network to try and get things moving again?
See, that's my question.
That's
all the unknowns. I mean, you see Austria going back into lockdown as an example. I think they've discussed it in Italy, and I didn't even realize you guys still have restrictions in Oregon.
Yeah,
because I've been in Arizona and there's no restrictions here whatsoever. I've just been in really Arizona, Texas, and Florida, where it's pretty much 2019. Other than
it's back to normal, man.
Other than just a few people wearing masks and whatnot, it's completely normal. There's no capacity issues or anything like that. So, but if you're an entrepreneur in Oregon, let's say, or maybe in Europe, or in Canada, for heaven's sakes. And you're saying to yourself, okay, do I really want to invest my life savings or risk my life savings? Do I want to take out a loan to create that widget factory, or to improve the logisticals, the logistics of the supply chain, when there's a strong probability that I lose that money or my tax rate increases, and you've got all these unknowns, and then further government intervention and distortions in the future, more regulations, more restrictions. And now on top of that, you've got, to keep it YouTube friendly, we'll keep it medicine mandates. So if I'm a business owner, I'm saying, wait a minute here, if the government is forcing me to do this to my employees, what's next? And again, that breeds more uncertainty.
That's absolutely, that is, that medical conditioning thing. I swear, like, I look out there and I don't think anybody cares anymore. Like, as an individual, the only people who care seems to be officials and governments and stuff like that. Like, I don't.
You gotta ask why.
Yeah,
Power
like,
control, my friend.
we the people are over it.
Yeah.
And so, like, it's okay. New Zealand was about ready to change their monetary policy, right? They were going to start increasing interest rates, whatever they were going to do. They had one case completely change the entire monetary policy of the entire nation. From one single case that comes in there. I did a video on that, and I'm like, this is not right. You don't change the entire course of a monetary history because one person is sick. Like, some individual, you don't even know their name, and that changes the entire course of history. Okay. Yeah. This is obviously being manipulated or pushed, at some point. Like that is not realistic.
Yeah, I did a video, I think yesterday or the day prior, where all of these talking head economists, these quote unquote experts that you see on CNBC and Bloomberg, they're trying to explain the labor shortage. And of course, they're trying to push this whole mainstream narrative. So their view is the reason there's a labor shortage is because people are too scared to go back to work because they're scared of the cerveza sickness. And I'm like, that
No.
makes no sense to me whatsoever. I don't know anyone that has said, I'm just scared to go back to work. And I'd like to hear what you've heard from your friends. Are any of them scared to go back to work, or are they chomping at the bit to go back to work?
Nobody's scared to go back to work.
Yeah.
I don't know anybody who's scared right now. They have no fear of being sick or being in contact with people. There's that, like, to me, I don't even know why it's even a concept anymore because nobody cares. Like, it's just gone. But when I think about the labor shortage, let's just take one industry, like trucking. Okay. So during the lockdowns, truckers retired. And they're like, man, if I ain't got, I'm just going to retire early. I'm out. Yeah. At the same time, you had less training of truckers taking place. So there was no new
because of the lockdowns. Yeah.
Yeah. So the schools were shut down too. So now you have a situation in which there's a high demand for truckers. A bunch of them retired and you didn't have new ones coming in. No wonder why you have a shortage, right? I mean, is there any question of this? I mean, it's not some magical thing that's taken place. I mean, you failed to train them and a bunch of them retired. I mean, yeah, so you have a shortage now, especially in a high demand area. Yeah. This has taken place in a lot of the industry. I mean, a lot of industries out there did the exact same thing. You shut down mills, same thing. A bunch of people retired. Well, now you want to fire the mill back up, and you have a bunch of people who really don't want to work at a mill. Right? Because all the people who really wanted to work at the mill just left. And I mean, I see it every day. Like there was, and it's also like, it has to do with, like, I don't know necessarily call it like a work ethics kind of thing, because I find that the younger generations really do want to do stuff, but like going to work real hard for 8 hours a day, like swinging hammers and stuff, is not really like something that interests them. Like they would rather do TikTok videos or, do something like, I don't know, dance classes or
just trade crypto.
Trade crypto, or, just find a better way, like something that isn't like, killing yourself like their old man did their entire life. They see these opportunities out there to make money in all kinds of directions. I mean, there has never been an opportunity to make more money than there is right now. I mean, if you do it right, you can have it pouring in from every direction if you want to put, you want to push it. So I can see where a younger generation doesn't want to follow in the footsteps of the previous, to work 40 years of your life only to, have something that barely carries you along. That's like they don't even see that. That's like, why, kind of thing.
Yeah.
And so it doesn't,
where I get concerned.
I was going to say, but what that ends up leading into is that you end up having like nanny state where, they want to be taken care of, where they want, the conveniences of life, but then no responsibilities of it, to try and, acquire and make it for yourself. They just want it to be there and ready.
And where do we get the stuff?
Oh, I don't know. I mean, that's one question that I've always asked.
Yeah, that's where I was going with it. It's great to make money on TikTok videos, but then who's putting food on the shelves in the grocery store?
Right. Who's growing?
Who's creating the lumber needed for the housing, for shelter? Where are we getting the energy that we need to sustain life?
That's exactly right.
You can make $100,000 a month on TikTok, but if there are no groceries, if there's no housing, if there's no energy, all that money isn't going to do you any good. Your standard of living will be less than when you were making, $2,000 a month flipping burgers.
That's exactly right. Cantillon essay on economic theory related wealth down to three things: food, conveniences, and pleasures of life. That's it, right? If you have food, if you got the conveniences, and you have pleasures of life, that's wealth. And now this false idea of wealth that is presented to these kids, they think they have it. You know, they get this food. It's like this is everywhere. It's like this easily available conveniences, right? And you have like ride share, Lyft, and Uber Eats and stuff. Like you don't have to do anything; it just comes to you. You know, these conveniences, and then pleasures of life. Well, that's all comes on the end of the screen. Like they're stuck to their phone. They get pleasure from this, right? So what once had like people's want to try and acquire food and to provide those conveniences and to have a pleasurable life is now like sacrificed into this fake, you know, pseudo idea of what all this wealth really is.
Yeah.
And these kids think that, you know, these younger generations, they don't understand that that's not wealth. It's just this perceiving of wealth, this like, you know, this false
Well, they think dollars are
idea.
wealth. They think that somehow the amount of dollars they have translates to wealth. And
Yeah, I guess I could see that where like, you know, if you have like, you know, $1 million, you're wealthy or something like that. But
yeah, they don't understand that if
it's
they
not
had
the
that
yeah.
$1 million on a deserted island, they would not be wealthy. They would be dirt poor. And so you have to, yes, I get it. If we had an environment where the amount of goods and services increased at the same level of the population, then yes, it is true that dollars, you would have more purchasing power, let's just say.
Right.
But if everyone is on in the betaverse, which is like what I call the metaverse, you know, Zuckerberg's new thing. If everyone is just living their life in virtual reality or on TikTok, then no one's producing the stuff. Then I don't care how much money you're making in the betaverse. You're going to be poorer. Your standard of living is actually going to go down, and that's a very tough concept for people to get their head around.
It really is. And you know, the problem with it is that that's exactly where it's leading to. I mean,
Yeah, right.
it is definitely heading that way. And I can't imagine how it is that, you know, society is going to function in a way where there's like no producers and all consumers. Like that doesn't
Right.
it just isn't possible.
That's a good way to say
And
it.
I don't I mean, I know like technology and innovation and everything is going to make like everything like easier on everybody, but you can't have a bunch of machines producing for people who aren't working. Like it's just like even that concept is eventually going to be like, you know, the machines will just kill you off. You know, like we end up terminated. Right? The machines are
Terminator.
like, why are we working for you? But it is kind of heading towards that way, and I see like at some point there's going to be such a painful moment, whether it's like the housing downturn or, you know, loss of jobs or something. But it's going to come to a point where it's going to be so painful on everybody that they are going to demand that Congress do something about it. And that's where I feel UBI is going to be like forced onto the people. Like they are going to push Congress to make it happen
Yeah, but the
because they
Fed
can't
can't
get
print stuff, man.
right. They can't print. That's exactly right. This is where it really starts to break down because a lot of people just don't understand that exact thing. What you just said is that the Federal Reserve cannot print up money and just willy nilly hand it over. And this is where the concept of UBI really starts to break down as far as where we have the Federal Reserve in their charter and what they can do today. But they've already talked about this, and what they can do is establish these digital wallets, and then the Treasury can have like these catastrophic bonds, these 100-year bonds that have no interest rate to them. And the Federal Reserve can purchase those bonds and directly inject the money after that into the people's wallets.
Right. Well, I was talking about the Fed can't produce or can't print the goods and services. It can only print the money. But also too, I don't even know if the Fed would need an asset to cover the liability, because what you're talking about is the Fed just printing bank reserves and that are denominated in dollars, and that's what would be in everyone's account. Therefore, that's what they could spend in the real economy. That's how they'd inject dollars and kind of get around the commercial banking system through UBI. But if the Fed were to do that under its current system, they would need some sort of offsetting asset, because if they create $1 trillion worth of stimmies, let's say, those are dollar denominated liabilities on the Fed's balance sheet. Well, where's the asset? Because now what they do is the government would issue a bond, a treasury, the Fed would buy it, then the government, the treasury, Janet Yellen would actually spend the money into existence, into the real economy. She would send out the stimmy check. But I don't know that they even have to do that. You know, I had a conversation with Richard Werner. And I specifically asked him, I said, can the Fed have negative equity?
Yeah.
And his answer was pretty much yes. There's really nothing that would stop them from just, even if there wasn't an asset, to continue to increase the liability side of their balance sheet.
Well, I to be honest with you, I guess I just don't know enough about the Federal Reserve's charter to know that for a fact.
The bottom line, the bottom line is you're spot on that regardless of what that system looks like, they'd have to change the Federal Reserve Act or completely ignore it.
I do have to wonder, can the Federal Reserve buy defaulting treasuries? Like say the Treasury couldn't pay their bills and like some of these treasuries started to default, can the Federal Reserve buy those?
I would say yes.
Yes. Now that is kind of putting money out there then, right? Because really you're buying more, you're putting out more than what the thing is really worth. Kind of idea. So that would be like injecting money into the system.
Yeah, they can just create whatever price.
Right. You can buy for whatever price.
They don't have to have a market price. They could just give them 100 cents on the dollar based on what they paid for it.
Exactly. And so like that kind of question does come up in my mind. It was just like, wow, what would that do as far as, would the Federal Reserve be able to get their liabilities back? That would start creating inflation and hyperinflation and stuff like that, or at least in my opinion, it could, lead or something. But those are, those are hypotheticals that we don't really know yet. Yeah, if they would actually buy a defaulting bond, that's that's like really hard for me to like kind of wrap my head around what the kind of environment that would be like, and then how the markets would interpret that. Like, would a defaulting bond still have value knowing that the Federal Reserve is going to buy it?
I think that's really the trigger for the long end of the yield curve with treasuries, because that's the question that everyone's asking is if we do have, let's just call it 6 or 7% inflation, if the CPI, which is kind of bogus, but if it's telling us that it's 6 or 7% by their own numbers, why is the 10-year trading at 1.5%? And the bond market has forecasted secular inflation very well, and it's forecasted transitory inflation very well, depending on how you define those terms. The devil's in the details there.
It really is.
Yeah, but assuming that it's kind of offsides, if you will, I think the reason the bond market is maybe predicting more disinflation or transitory inflation is because the bond market assumes the mechanism for creating dollars is going to stay the same as it is right now, meaning that they're heavily reliant upon the commercial banking system to loan money into existence. And the only other way around that is for the government to deficit spend and for the Fed to monetize the debt. But they think that that's quote unquote transitory because the government officials or the politicians won't agree. They'll just butt heads. And, although they can pass a $1 trillion, $1.2 trillion package, they need to pass a $3, $5, $6, $7, $8 trillion package to make up for the lack of lending or the lack of dollars that are being created by the commercial banking system. But my whole point there is if we move into the system that you're talking about with a central bank digital currency and UBI, then I think the long end of the curve, the bond market, will say, okay, we were talking about inflation being transitory. Now we think we're moving into secular inflation because the way the dollars are created in the real economy has completely changed.
That's exactly right. So, and that's, George, that is probably one of the reasons why I just don't jump into the hyperinflation scenario. Until that happens, until that digital currency or until that change takes place, I'm still on board with Dr. Lacey Hunt. And, and how, we are going, if this continues, if things don't change, we are probably going to see those interest rates on those 10-year treasuries continue to go down. Yeah. And so it's just going to be, because it's going to be the mass amount of, the people can't take out enough debt to keep the system going. So the government has to do it now, right?
Yeah, right. And then you're dependent on those politicians that can't agree on anything. And
You can't agree on anything or
who
making it
knows where
right.
that goes. Yeah, and I would argue too that even if they do, let's say, a $1 trillion stimulus package annually, that's probably not enough to compensate for the lack of dollars that are being created by the commercial banking system, because
Yeah,
everyone's balance sheet
exactly.
is just levered up, or there's just so much uncertainty out there that they don't want to take any more debt.
Well, and it's also like, the good debt and bad debt, right? When you're taking out consumer debt instead of like debt that's going into production, then yeah, you're going to end up in a future moment where you're going to have to stop spending and pay for past consumption.
Yeah.
And that, I mean, you can take out another loan, and continue on, but at some point the piper wants to be paid. And you like, I just think about my own life. At one point, it was just like, man, I got to stop taking out debt. And then once you stop taking out debt and you start paying it off, your life sucks. Like you don't have anything, like you don't have any money, and you're like, the money that you do have, you're paying off for the past consumption, which sucks even more. And so it's like,
Right.
you just like, not only is it bad, but then you like make it even worse. So, but eventually you pay off the debt, and like the world is like all of a sudden a beautiful place, and the weight is off your shoulders and everything feels really good and it's awesome, and you're thinking, man, why didn't I do this sooner?
Yeah. And then you got a YouTube channel.
And then you got a YouTube channel, and life is like, good, and you get
So
invited to Texas.
that's a good way to transition into the end, buddy. For my viewers who want to find out more about what you do, where can they go? Where can they find this incredible YouTube channel? And do you have a website, or I think you got a Shopify store, don't you?
Yeah, so I have the website, uneducatedeconomist.com. I'm mainly active on YouTube. I do have the other social medias, Facebook and Twitter and Instagram. My wife has kind of taken over my Instagram lately. So if you want to see a little bit more about like, kind of personal things that's going on with me, she kind of posts different things on Instagram for me. But yeah, I'm mainly active on YouTube. If you want to send me an email, I've been kind of overwhelmed with my emails lately. So I've been sorry to the guys who I haven't responded to, but you can send me an email at uneducatedeconomist@gmail.com. Like I said, I try to respond to the emails as quickly as I can. And yeah, so that's pretty much it. I'm just on YouTube and hanging out there. I post a video, every day, every other day, try and get a conversation going.
That's incredible. How many subscribers do you have now?
I just crossed 83,000 subscribers.
Oh,
and man, I tell you, I was amazed when I hit 5,000. When I hit 5,000,
I was amazed when I hit 500.
Yeah, actually, to be honest, dude, actually, I was amazed when I had 12. I'm like, I was showing my wife 12 people like listening to me, haha. But yeah, it's done a number, and I have to think like especially you, George, you've really done a number for me, and guys like Mike Martins and Boom Bubble Bust Repeat and Bull Boom Bear Bust. I mean, these guys, they gave me a lot of encouragement in the early days, and that's really what it takes. It's just like, to be told that, hey man, we like what you're doing, and just keep going. That's what does it. That's what it wasn't. It wasn't like the idea that I was going to get some money out of it. It was just the enjoyment of like putting yourself out there and starting this conversation and meeting people and stuff. It's just been a life-changing thing for me.
Yeah, what I'm trying to really push now is I'm trying to help 1,000 people create content. That's kind of one of my new goals. Whether it's starting their own YouTube channel, their own blog, their own podcast. I'm really trying to encourage people that are passionate about the freedom and liberty and free market capitalism movement, if you will, or those ideas, to get out there and just start talking about it. And
Dude,
grow
that's
your
beautiful.
own YouTube channel, grow your own audience. So not only can you have more financial freedom, but you can really encourage others to open their eyes up to how important the concepts that built this country and how we need to really push back against this move towards authoritarianism. Yeah. And I think we're on a very slippery slope right now, and we need to get off that road to serfdom and back on a road to freedom. And I think that if everyone goes out there, that's had this idea of maybe creating their own content around that message, if they do so, it's really going to have a huge impact moving forward. So
It
maybe
really will.
what we can do, I'm trying to do like a live stream every 2 or 3 weeks where I go and I take people through the analytics of my YouTube channel and tell them and show them, why I did changes to thumbnails or titles or, the tags or the end screens and kind of, or, the average view duration, those charts. And I just go through the metrics and I show them the things that I did to grow the channels and to help them do the same. So maybe, the next time I do one of those, you can hop on and maybe share some of your secrets with the viewers that will help them grow and maybe encourage them to start their own content creation, whether, again, that's in the form of a blog, YouTube channel, or podcast.
Dude, I love it, man. The idea just gives me chills. I am so on board with something like that. I encourage like everybody around me. They say, like, I have people come to me and say, man, I didn't know you had a YouTube channel. I'm like, dude, you should start your own. What are you into, man? Like, what it doesn't have to be on economics, man. What are you into, man? Let's start you a YouTube channel. I encourage so many people to try and do this stuff. And very rarely do I find anybody personally who has. And yesterday I gave a shout out to a lady, who's, she's just playing music and it's her release. And this is the way that she is able to, take the issues that she has in her life and put it out there for people to, relate to. I found that beautiful. And, I gave her a shout out for that. But, this is an incredibly important topic. And I just don't feel that enough people, especially if you don't have like a bunch of money, like it just seems so over your head and so lost of a concept that it just seems overwhelming. It's not the case. I mean,
All right. Well, shoot, I guess we lost the uneducated economist there. We'll go ahead and I think his phone maybe cut out. But guys, make sure you check out his channel. We'll get him on to talk about kind of his back-end analytics. And I want to encourage all of you to go to rebelcapitalistlive.com right now and make sure you get your tickets for Houston, January 7th through the 9th. Like I said earlier, it's going to be Ron Paul, G. Edward Griffin, Chris Cole, Lynn Alden, Richard Warner, just to name a few, and the uneducated economist himself is going to be there speaking live. So don't hesitate. Go to Rebel Capitalist Live right now and get your tickets. Hi, guys. I'd like to invite each and every one of you to the next Rebel Capitalist Live event. If you are a fan of the Rebel Capitalist show, I guarantee you will love the live event. The next one is Houston, where you can meet and listen to speakers, all your favorites from the Rebel Capitalist show. People such as Dr. Ron Paul, Chris Cole, Lynn Alden, just to name a few. If you want to check out the rest of the speaker list and find out how you can attend, we'll put a link in the description below, or you can just go to rebelcapitalistlive.com. This is an event where you can learn to build wealth and thrive in a world of out-of-control central banks and big governments. But it's not just about building wealth. It's about increasing your freedom and networking with like-minded individuals, fellow rebel capitalists. It's an amazing event. I know you'll absolutely love it. Check out rebelcapitalistlive.com, and I will see you in Houston.